Why is property a good investment? Well, let's find out. Here are just a few key things to consider. Number one, over the past 40 years, Australian property has delivered an average annual growth rate of around 7%. In fact, real estate has outperformed many other asset classes in terms of long-term returns. Now, while stocks and bonds can generate strong gains during bull markets, yes, they are also subject to volatility, stagnation, or decline. Property, by contrast, offers both capital growth and the stability of a tangible asset. Number two, Australia is currently experiencing a surge in overseas migration. In 2024 alone, the overseas born population increased by 396,000 people, lifting the portion of migrants to 31.5% of the total population. And that's up from 30.7% the year before. This growth is being driven by a rise in both permanent and temporary visa grants. The natural question is, where are all these people going to live? And what is that going to do to the property prices? It's not a secret that the pressure on the housing market is real and it is growing, which leads us into the next point. Number three, Australia is facing a significant housing shortfall. Demand for homes far exceeds supply, contributing to rising prices and rental stress. Factors such as limited construction, high building costs, and growing migration have all contributed to this imbalance, making property one of the most in-demand asset classes in the country today. Number four, interest rates have begun to ease, and further cuts are expected. So, lower rates attract more investors into the market, which increases demand, and higher demand tends to push property prices even higher. For the savvy investor, this presents a timely opportunity. Number five, essential item. So much like food, shelter is a fundamental human necessity. During COVID lockdowns, supermarkets never shut their doors because food is essential. Similarly, people will always need housing. So that's why property continues to hold long-term value and relevance, even in uncertain times. But just something to keep in mind, not all properties are created equal. Of course, not every property is a high-performing investment. So it is essential to conduct thorough due diligence and to ensure that you're investing in the right type of property, one with strong capital growth potential, favorable yields, as well as a solid location. Because if you end up buying the wrong type of property, this can and will end up costing you a lot of money. So if you're considering investing in high growth properties, with your super or without your super, you don't know where to start, you want to make sure that you find the right property, feel free to reach out anytime. I'm always happy to help. George signing out. Goodbye.